each one of them to a person realized there was something wrong with the government awarding them money in their bank accounts to stay home because of the recent COVID crisis. Leads to questions like, well, if the government can just award us money, why do people have to work and why do we have to pay taxes, right? I'll leave it there and let the other guys expand, but it's quite simple when it comes down to it. Morally, or not morally, they just believe they can see the problem. And then there's a famous quote, I'm sure Larry will be able to tell me who said it, but if printing money led to prosperity, if we could print ourselves to prosperity, why is there still so much poverty in the world? People understand that.
Bitcoin's mining difficulty has recently reached an unprecedented high, despite the digital currency's recent underwhelming price performance. Mining difficulty measures the competitiveness of Bitcoin mining, rising as more mining units are deployed. This increase indicates that mining remains a profitable and popular endeavor. According to data from CoinWars, Bitcoin's current mining difficulty stands at an impressive 55.62 trillion hashes. The network's previous notable peak was 53.9 trillion hashes on July 17th of this year. The mining sector is experiencing something akin to an arms race, with many rushing to put as much mining power online before the halving. Notably, companies like Hot 8 and Riot, co-founded by Scott Norris of mining firm LSJP, have shipped their latest generation machines, significantly boosting their hashing capabilities. Despite these mining achievements, the broader market sentiment tells a different story. Investor confidence in Bitcoin turned bearish recently due to Evergrande, the Chinese property giant, filing for Chapter 15 bankruptcy in a Manhattan court. This event prompted some investors to divest from riskier assets. In a related video, Greg Foss delves into Bitcoin and its relationship with the fiat Ponzi scheme. He also discusses Bitcoin as a form of digital energy and highlights the issue of monetary monopolization and unequal distribution, as the Federal Reserve can print money at will.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The interest expense on the debt burden that's been accumulated already is going to exceed the ability of the economy, which is your tax base, to keep pace with your interest expense. That assumes that governments become fiscally responsible and don't accumulate any more annual deficits. It's mathematical certainty, 100% certain that fiats will continue to debase. And there's very few things in finance that are 100% certain. So when you know something with 100% certainty, you better act on it. And if you don't act on it, you're a fool. And there's lots of fools in legacy finance because they don't want to believe the mathematics, but it's pretty simple math. So I'm spiritual. I'm not that religious. I really think, though, there's a link between Bitcoin and spirituality, religion. I'm very honored to be here. And he came up with a strategy that I thought was quite remarkable, even in my business, trying to convince investment policy committees to take exposure to Bitcoin. He said he convinced his investment policy committee to make an allocation to Bitcoin. Let's pick a number, 6%. I think that's the number he used. They decided they were going to invest 3% immediately and hodl for 4 years. And the other 3% they were going to rebalance. Meaning, if the price of Bitcoin went up, they would sell it down in their portfolio and keep it at 3%. But if the price of Bitcoin went down, that 3% would get built up at a lower price. And that's actually quite remarkable because it's worked in a down market for Bitcoin. They did start investing, unfortunately, near the top. But now their average cost on the 3% that they can rebalance has come down towards right near current market prices because they were able to buy some lower. And I thought that was a remarkably smart policy decision on behalf of a nonprofit that I haven't even seen in the real world of Bitcoin allocation. Now, a 6% allocation, let's be very clear, people, is very large for just about any institution, profit or nonprofit, pension plan or the like. I don't think it's irresponsible, but I do understand that it's very large. And his ability, if it was 6% and you did 3 plus 3, or if it's 4%, 2 plus 2, you get it. If it's 1%, 50 basis points plus 50 basis points, very smart investment policy decision. And this is from a young man who didn't do that on a professional basis. I'm like, wow, think outside the box. This type of allocation policy works for everybody. So congrats, hats off. He's also working for another nonprofit or another investment organization that's also going to embrace Bitcoin. Education is key. Bill Miller, who is going to be speaking, or Bill Miller Sr., his son is going to be speaking at Bitcoin conference down the road, has a great expression. He goes, volatility is the price of return. You guys know that a price that goes from your top left to your bottom right in a straight line has no volatility. You understand that, right? It's not going up and down. It's absolutely moving in the first derivative, straight down. And your investment policy guys would define that as there's no volatility, therefore there's no risk. Oh, no risk? It's gone from $10 down to $1 with no volatility. These guys are geniuses on Wall Street. They're not. They're thinking inside these silly little boxes. And we have to educate them how to think outside that box. Because yes, Bitcoin is volatile, but again, in the words of Bill Miller Sr., that is the price of return. Show me something with no volatility, and assuming it doesn't go like this, but no volatility, chances are it has no return as well. You don't get things for free in this world, people. Very few things, actually, unless the government gives it to you.
Another metric that has recently surged and continues to climb annually is the hash rate. The hash rate serves as a measure of the computing power within the Bitcoin network. The higher the hash rate, the more hashing attempts Bitcoin miners can perform per second in their quest to solve cryptographic puzzles. This serves as a direct indicator of the network's computational strength. Currently, Bitcoin boasts a staggering 446 quintillion code-breaking attempts per second. While this figure is substantial, it doesn't quite reach the peak achieved earlier this month when the network was generating almost 486 quintillion attempts per second. Greg Foss now delves into the relative percentage of risk and asset allocation that can be dedicated to Bitcoin to ensure the security of assets and maximize returns. Let's now listen to Greg's insights on this matter.
When you start studying engineering or thermodynamics, the first law of thermodynamics is the law of conservation of energy. Energy can neither be created nor destroyed. And I like to think of Bitcoin as digital energy, proof of work energy. It's something that resonates with me. And so the law of conservation of energy is near and dear to my heart. And I think of Bitcoin and the digital energy paradigm as the United States as global reserve currency and the ability to print currency. They actually have the ability to print energy, right? The United States, petrodollar, the United States has the ability to print energy, which is a huge competitive advantage, but not altogether egalitarian. So Bitcoin fixes that. And Bitcoin proof of work, not proof of stake, Bitcoin proof of work resonates with me as an engineer. And I think that's sometimes why there are engineers that seem to, grasp it quite quickly. Even if it is 6% allocation, please focus on the other 94% in your portfolio. That's where the real risk is. Bitcoin is your insurance. You don't buy and sell your insurance. You don't try and trade insurance, fire insurance on your house. You accept it, and it's there to protect you. Focus on the other 94% of your portfolio. I always play probabilities. That's how you manage risk, okay? So there is a possibility, but it's not likely, okay? That being said, I'm an optimist, and I'd like to do everything I can so that there is an orderly transition. I love the United States. So you guys may not know, did I tell you I'm from Canada? Yeah, I did tell you I'm from Canada. Look, I love the United States. Like, Canada's a rounding error. I need you guys to survive, okay? I really do. I need you guys to survive for the benefit of my children. And you guys are, I'm going to say it, you're effing it up, okay? So you got to get back in order. I need you guys to understand that there is a way for America to remain the bastion of freedom and the bastion of where everybody in the world, this shining light where everybody wants to live. I mean, please do it, and Bitcoin is the answer. So that's my optimistic outcome.
In their latest blockchain update on August 22nd, Pantera Capital, the cryptocurrency asset management firm, reiterated their bullish Bitcoin price forecasts for 2024 and beyond. They emphasized the strong correlation between Bitcoin's price performance and its halving cycles, with the next halving anticipated within the next year. Pantera Capital's analysis suggests that historical patterns are likely to repeat themselves. Historically, Bitcoin's price has tended to reach both cycle bottoms and tops in approximately equal timeframes from each block subsidy halving event. These halvings, which occur roughly every 4 years, reduce the number of new Bitcoins awarded to miners by 50%. The run-up to the halving typically sees Bitcoin's price increase, followed by a surge in value after the event. These post-halving rallies have historically taken about 480 days to reach their peak. Pantera Capital speculates that the bear market bottom witnessed in 2022 marked the bottom of the current Bitcoin price cycle. If history holds, Bitcoin's price could reach around $35,000 by the time of the next halving in April 2024. However, the 480 days following the halving could bring not just a new all-time high but potentially even more significant price gains, possibly reaching $148,000. This projection suggests that by July 2025, Bitcoin could be on track to achieve its next record-breaking high. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.